First of all, from all of us here at Saltus, we hope you and your families are healthy, safe, and adapting well to our new temporary way of life. At Saltus, we've all made the transition to working from home, replacing face-to-face meetings with video and conference calls. Most importantly, we are fully capable of fulfilling our obligations to you, of managing your investment portfolios and providing financial advice. The reason for the dramatic market falls in March was the intersection of a public health crisis, the coronavirus, with an oil price war, principally between Saudi Arabia and Russia. Saudi Arabia flooded the market with cheap oil, which led to a collapse in the price. All this came at a time when the valuation of risk assets were expensive and we saw significant falls extremely quickly. Leveraged investors were forced to unwind their positions at almost any price and indeed sell anything they could. This meant that traditionally risky assets, such as equities, and traditionally safer assets, such as gold or government bonds, all fell together. This led to a coordinated global monetary and fiscal response. Central banks around the world cut interest rates to near zero, as well as introducing more quantitative easing. In America, for example, the Federal Reserve made $1.5 trillion available, as well as a promise of more to come. Governments also stepped in, promising to pay up to 80% of furloughed workers' salaries in the UK, or writing cheques to the unemployed in the US. The speed and magnitude of the response has meant that markets have rallied off their lows, but they remain volatile as investors come to terms with the potential economic damage caused by COVID-19, balanced with the positive effect of such strong stimulus measures. The portfolios were well positioned coming into the crisis and have all behaved as we would have expected and well within their risk bands. As such, any moves have been made with a view to producing the best possible risk-adjusted returns over the next 3 years, rather than looking in the rearview mirror trying to fix things. Therefore, we have sold some of our winners, mainly macro trading funds, which have been on the right side of recent moves, and some fixed interest positions. We have also rebalanced portfolios to ensure that we have cash ready to deploy in riskier assets when we believe the time is right. It is important to remember that all portfolios are managed on at least a 3-year time horizon, and therefore there are reasons to be optimistic. We believe that 2 of the 3 pillars needed for a recovery are already in place, namely the fiscal and monetary responses I've talked about, and the magnitude and speed at which they were put in place is helpful. The final unknown is how the virus progresses. Early indications are that social distancing is starting to slow the spread of the virus in the West, but it's too early to say for sure. There's also lots of work going into trying to find a vaccine, but again, the timelines are unknown. However, on a 3-year view, we are starting to see attractive opportunities in a number of asset classes, namely convertible bonds and some areas of credit, and we remain ready to deploy cash in equity markets should we see further significant weakness. We must remember that this too shall pass, and accept that while we may see more volatility in the short term, we are also seeing good entry points for a number of long-term investments. If you or any of your friends and family are feeling uncomfortable or would like a little more information from us at this time, then please do contact your relationship manager, who will be more than happy to help. In the meantime, from all of us here at Saltus, we wish you all good health.